Here is a summary of Citigroup Incorporated's first quarter 2026 earnings call, designed for clear and concise delivery. Introduction. Citigroup Incorporated began its first quarter 2026 earnings call with Jennifer Landis, Head of Investor Relations, introducing Chair and CEO Jane Fraser and CFO Gonzalo Luchetti. The call focused on strong first quarter performance and future outlook, while acknowledging ongoing strategic transformations. Key financial metrics and performance. Citigroup reported a robust start to 2026, with net income of $5.8 billion and earnings per share, EPS, of $3.06. The return on tangible common equity, ROTCE, stood at 13.1%, highlighting improved profitability. Revenue growth. Total revenues surged by 14%, driven by strong performance across most core businesses. Services was a standout performer, with revenues up 17%. This segment saw a significant 40% increase in new mandates, 12% growth in cross-border transactions, 16% deposit growth, and over 20% increase in assets under custody and administration. Markets achieved its best quarter in a decade, surpassing $7 billion in revenues. Equities revenue was up nearly 40%, while fixed income, currencies, and commodities, FICC, increased by 13%. Banking demonstrated strong momentum, with revenues up 11% and a record first quarter for M&A. Investment banking fees rose 12%, with equities capital markets, ECM, up over 60%. Wealth management delivered its 8th consecutive quarter of growth, with revenues up 11%. This segment now includes U.S. retail banking, which contributed to a 13% increase in Citi Gold and retail banking. U.S. consumer cards saw 4% revenue growth, with spend up 5% and a strong ROTCE of 19.2%, indicating consumer resilience. Profitability and margins. Gross margin. While not explicitly stated as a single figure, the strong revenue growth, 14%, coupled with a more moderate expense increase, 7%, resulted in positive operating leverage, indicating an expanding gross margin. Efficiency ratio. The efficiency ratio improved to 58%, a significant improvement of approximately 400 basis points year-on-year, driven by strong revenue growth outpacing expense increases. Management's forecasts and outlook. Full year 2026 outlook. Net interest income, NII, ex markets, expected to grow approximately 5% to 6%. Non-interest revenue, NIR, ex markets, growth driven by momentum in services, banking, and wealth. Efficiency ratio, targeted at around 60%. U.S. cards net credit loss, NCL, rate, expected to be between 4% and 4.5%. ROTCE target, reaffirmed at 10% to 11% for the full year. Future quarters. Management expressed confidence in continued momentum and delivering the full-year targets. They will provide more detail on capital deployment expectations, including share repurchases, at their upcoming Investor Day. Significant risk factors. Global macroeconomic uncertainty. The ongoing Middle East conflict is impacting Asia and Europe more severely than the U.S. and Brazil. Inflation remains a significant risk to growth, potentially leading to more restrictive monetary policies. New capital regimes. Citigroup is actively advocating for changes to the proposed new capital rules, viewing the latest notice of proposed rulemaking, NPR, as an improvement, but not yet ideal. Execution of divestitures. The firm is continuing with the final phase of its divestitures, including the sale of its consumer business in Poland and the ongoing Banamex sale. Highlights strong overall financial performance. Net income, EPS, ROTCE, and revenue growth exceeded expectations, demonstrating broad-based strength. Exceptional performance in key businesses. Services and markets delivered outstanding results, showcasing their strategic importance and resilience. Transformation progress. 90% of transformation programs are at or nearing their target state, making the firm materially safer and sounder. This is leading to a reduction in transformation spend and improved operating efficiency. Capital returns. The company repurchased $6.3 billion of shares in the quarter and is nearing completion of its $20 billion buyback plan. Strategic focus on organic growth. Management emphatically stated their singular focus on organic growth, ruling out acquisitions. AI deployment. Citigroup is methodically deploying AI at scale across the firm to strengthen defensive capabilities and drive innovation. Lowlights consumer branch banking profitability. While improving, the ROTCE for this segment remains below desired levels, indicating ongoing work is needed to enhance efficiency and returns. Uncertainty around regulatory timelines. The completion of regulatory assessments and closure processes for transformation initiatives are controlled by regulators and can take time. DTA utilization pace. The pace of deferred tax asset, DTA, utilization remains a focus area, with management committed to accelerating its consumption through increased North American earnings. Most important statements from management. Jane Fraser, Chair and Chief Executive Officer. We picked up right where we left off last year, with an exceptionally strong start to 2026. This opening statement set the tone for a positive earnings report. Services, our crown jewel, had an exceptional first quarter, highlighting the strategic importance and performance of this business segment. We continued strong performance across our lines of business, showing the benefit of a diversified model which continues to drive consistent, predictable revenue growth, emphasizing the strength of Citigroup's diversified business model. I want to be crystal clear. We are only interested in and focused on organic growth. Period. End of story for the whole firm. A strong and unequivocal statement rejecting acquisitions and reaffirming the strategic direction. Citigroup Incorporated has a lot of momentum, and we are not going to be distracted from it. Reinforcing the focus on execution and ongoing transformation. 90% of our programs are now at or near our target state, and our firm is materially safer and sounder as a result of this work, indicating significant progress on the transformation front. One good first quarter does not a full year make. A cautious note on outlook, acknowledging the ongoing macroeconomic uncertainties. Gonzalo Luchetti, Chief Financial Officer. As I step into the role, three elements stood out to me quite distinctively. First, we have a formidable foundation, underscored by a robust balance sheet, rigorous risk management, and a well-diversified business model. Second, I am excited about the opportunity to help deliver significant return improvement over time. Finally, I am highly energized by our relentless focus on execution, outlining his confidence and key priorities as CFO. Our efficiency ratio of 58% was against 14% revenue growth, resulting in an improvement in our efficiency ratio of approximately 400 basis points, quantifying the significant improvement in operational efficiency. The American Airlines Barclays portfolio that is coming in the second quarter is, of course, fully factored in to guidance, providing clarity on the inclusion of a significant portfolio acquisition in future projections. Our approach is to maintain very strong cost discipline on a tactical basis and, in addition, to be driving structural efficiencies over time so that we can enable and allow ourselves to make the targeted investments that we think are necessary in order to drive our returns consistently to a higher place. Detailing the expense management philosophy. In conclusion, Citigroup delivered a strong first quarter of 2026, characterized by significant revenue growth, improved profitability, and substantial progress in its transformation initiatives. While macroeconomic headwinds and regulatory changes present ongoing challenges, management remains focused on executing its organic growth strategy and driving sustainable returns for shareholders, with further details to be shared at their upcoming Investor Day.